Hello, and welcome to your video introduction to the new deal planning and screening module in DealSense. This is the latest enhancement to MoneySoft's DealSense M&A software system that provides a rigorous framework for evaluating the value and economics of middle market transactions. M&A participants have long used DealSense to streamline the deal-making process and promote sound M&A negotiations and decision-making. A separate video tour about DealSense's deep dive analytics, deal planning, and reporting is available on our website at moneysoft.com. This video will focus on the new deal planning and screening module. This new module adds another dimension to DealSense that focuses on developing and using a buyer's goals and criteria to quickly evaluate and triage deal opportunities. This is a handy tool to help determine whether a given opportunity merits the time and energy for a more diligent analysis that is the heart of DealSense. So naturally, the deal planning and screening module puts the spotlight on buyer planning. The objective of this section is to organize a buyer's financial criteria, acquisition strategy, deal criteria, preferences, and motivations into a tool that will be used to evaluate deal opportunities using a minimum of financial information. The first step is to enter contact information for the buyer and the buyer service provider. The buyer description defaults to strategic, but you can change that. Also, you can import your planning inputs from another DealSense file to save time. This is the buyer preferences. The top section is where you input your financial criteria. Of particular importance is the investment hurdle rate, which is used later as part of the process of estimating a purchase price. Other inputs describe the type of company you're seeking. The deal planning and screening module includes 3 surveys that will later be used to evaluate a potential candidate. The first is used to rate the importance of 16 characteristics by degree of importance. The business drivers survey includes 8 market factors, 8 sales factors, 5 IP factors, 8 supply chain factors, and 5 financial factors. Each group also contains a custom user-defined input. The third survey, personal and lifestyle considerations, is intended for the individual or closely held buyer. Later in the program, each of these factors can be rated against a given acquisition candidate's ability or strength in each of these factors to reach an acquisition desirability index score that's useful for comparing multiple different opportunities. Completing the surveys concludes the acquisition planning. Now we can move on to a review of the acquisition candidate. The first step is to enter the candidates and their advisor's contact information, along with basic information about the business and the number of years of financial info that you will be entering. Because the deal planning and screening module is intended for quick thumbnail analysis, the number of available income statement and balance sheet accounts are intentionally set at a minimum. Elsewhere in DealSense, you have more line items to work with for a much more granular analysis. After entering basic balance sheet line items, the planning and screening module generates an earnings and cash flow summary and presents a simplified free cash flow by deducting estimated CapEx and changes in net working capital from EBITDA. As part of the buyer planning, surveys may have been filled out for the characteristics, business drivers, and personal and lifestyle requirements of the buyer. Here, you can now rate the candidate's strength and believed ability to fulfill each element. The 2 sets of surveys are processed in order to arrive at an acquisition desirability index score, which you'll see in a moment. In this next section, you set summary assumptions for EBITDA projections and a second set for simple free cash flow projections. For each of these projections, you can create 3 different scenarios: best estimate, upper/optimistic, and lower/pessimistic ranges. The projected results for each scenario are displayed on this form. You just click on the appropriate control and they're automatically presented. These results are refreshed anytime you change an assumption. With the completion of the planning section, input of summary financial data, setting of projection assumptions, and the completion of acquisition candidate surveys, we are set to move on to the ROI and pricing section. In the top section, you input your cash flow, debt, and valuation assumptions. DealSense will use those assumptions to estimate the maximum price for the business without debt, and then recalculate the maximum price with debt in the deal. Cash flow assumptions start with the buyer hurdle rate set in the planning section, which can be adjusted up or down based on the relative riskiness of the investment. This adjusted hurdle rate will be used to calculate the maximum price using projected EBITDA and simple free cash flow. Exit assumptions include the exit year and EBITDA exit multiple. Other assumptions include the rates for taxes, if any, and dividend payout. Debt inputs include a total debt to EBITDA multiple, the average cost of debt, and repayment term in months. These assumptions will be applied to the projected cash flows to estimate the maximum purchase price that can be paid and still meet the buyer's adjusted hurdle rate with debt in the deal. The planning and screening module includes a thumbnail valuation. Value metrics are based on assumptions for multiples of sales, cash flow, and EBITDA, along with capitalized historic EBITDA. These value metrics provide a frame of reference for selecting a price the buyer will consider paying for the business. Based on the assumptions in the top section of the screen, the program solves in step 2 for the maximum price the buyer can pay, first in an all-cash deal, and still meet their adjusted hurdle rate. Then, using debt capacity as a guide, you input the total debt for the transaction, and the program solves again for the maximum price that will hit the target adjusted hurdle rate, but now with debt or leverage in the deal. You can click on the Details button to see the underlying calculations. With these maximum prices, thumbnail valuation, and seller's asking price as reference points, the next step is to input the transaction price. After you do, the program displays the EBITDA multiple and the amounts of invested equity and debt based on this price. On the right side of the screen, there's a scorecard that summarizes the transaction. The ADI score is displayed for business drivers, characteristics, and lifestyle factors. The surveys were based on a scale of 1 to 10, so a higher score means a stronger match. This scorecard also provides financial ROI metrics for each of the 3 projection scenarios: best estimate, upper/optimistic, and lower/pessimistic. The metrics include simple return on investment, IRR on the buyer's invested equity, the hurdle rate and spread, which is the buyer's IRR less the adjusted hurdle rate, the present value and net present value of the cash flows, profitability index, which is present value divided by the initial investment. A profitability index greater than 1 means the ROI exceeded the adjusted hurdle rate. So greater than 1 indicates a profitable deal based upon the initial data and all assumptions. The investment turns is the number of times that the initial investment is paid back over the term of the investment analysis. Payback is the number of years required for the invested equity to be paid back using undiscounted projected cash flows. IRR based on dividends is the return to equity holders based upon actual dollars that the buyer can bank, dividends or distributions, and net proceeds at exit. Some investors included annual management or administrative fee to be paid by the acquired company. The program will calculate the IRR after deducting management fees from cash flows. By clicking these detail buttons, you can review the details for each scenario. This price and ROI section provides a tremendous amount of analysis and insight based on a surprisingly small amount of entered information. It's fast but smart. The deal summary report provides an overview of the transaction with key assumptions and returns presented for all the scenarios. Here I've exported a deal summary report to Excel and added some formatting. This report includes the data points that will help a buyer compare various investment opportunities and make a systematic decision on whether to take the opportunity to the next level, in which case the remainder of DealSense is waiting to help analyze and structure an economically sound M&A deal. With the new deal planning and screening module, DealSense further establishes itself as the Swiss Army knife of M&A deal-making software. As you can see, the new deal planning and screening module gives you an organized way to define a buyer's goals and criteria and quickly evaluate deal opportunities before performing an in-depth analysis in the other sections of DealSense. Current subscribers can get the new planning and screening module immediately by clicking on the Check for Updates button on the DealSense start screen. DealSense customers with older versions are entitled to a special subscription upgrade offer. Call the 800 number on the screen to speak with a DealSense expert, or visit the web address on the screen to subscribe today. Thanks for watching.